Zoom. Okay. All right. So what I'm going to do is go through the top 400. Just give me a second here. Can I? All right. I'm going to go through the top 400. So very simply, what I did was that I took the top 250 names, best performing stocks, the last 3 months, 6 months, year to date, and 1 year, right? So then when I do that, it gives you roughly 724 names, right? That's just too many names. So what we're going to do is we're going to put one little scan. That one scan is price above $2.50. That's one. Average daily volume or average 20-day volume is over 150,000 shares. But more importantly, this one, the stock is within 3% of its 20-day moving average. And the reason why we do that is so that way we can try to find stocks that, for the most part, maybe have been consolidating, because we want to buy either, contraction, or we want to buy some mean reversion setup. So with this one, we're going to just try to look for contraction plays. All right. So by putting that one particular scan, that narrowed down the list from roughly 724 names to about 724 names to 73 names. So let's see if we can find some setups for tomorrow. All right. Just here, but just admit this one person in. All right, so here's the first one, TK, oil and gas stream. As you can see here, the way I look at things is very simply. Stock's been trading sideways for a while, roughly about 2 months. Nice little consolidation here inside day. I like the stock going through $4.58. Buy stops under $10 a share, 5 cents above this price for Monday and Monday only. So buy stop 463, and let's put the stop right over here at 430. So TK is the first one. Here's another one, 222,000 shares. We also have to check the earnings, but this is not bad at all. Down 3 days in a row. Somewhat of an update right over here, but STIM 636, buy stop 641, initial sell stop here 590. Oh, Lord. KRTX, here's another one, not bad. Biotechs have been doing well. Obviously, this stock right over here had some major news announcement. Had to be some type of FDA news. 223. Again, this looks really good. 202.89. The only issue with this is 363,000 shares that normally if this thing triggers at the open, it's probably going to have a wide spread, and that sometimes is somewhat of an issue. So let me skip this one. I'm going to put it here down the side. KRTX, ATM. Ah, 97,000 shares. Let's skip that one. Oh, Lord. A lot of biotechs. The issue with the biotechs here is that normally right around this time, they tend to announce, studies. That makes it a wild card. So I'm going to skip that one for now. This one we went long on Friday, down multiple days in a row, 1, 2, 3, 4, 5 through the high. I got involved at 1053, down 7 days in a row, up through the high. This was a stock that just recently was up. Let me just submit this person here. A stock that was just recently up 4% or more on 3 times the average 20-day volume. That's the purple candles here, right? So this one's already on the list. I already sold some on Friday up 25 cents. Mm. BTU, this is now on my do not trade list. I mean, this stock is just, it's just what it just doesn't go. Sorry about the lighting, but I'm just not doing it in the office right now. And the market over the last, I'm not gonna look at the market. I'm just looking for setups. The market this past week provided some great opportunities. Um, so we have to continue under the assumption that the opportunities in the market is going to, continue to do well as far as individual trades are concerned. But some stocks that were on the list the last couple of days, the last 5 days, have done pretty well. Here's one that, on this day, I decided not to put it on the list because the stock closed at 219.50, and the buy stop was, almost $4 or $5 away, but it still did well. Okay, so for those of you that came in just a little bit late, very simply, I just went through the top 400. The top 400 is when I take the best performing stocks on a year-to-date basis, which so far it's only been whatever 10 days, on a 1-year basis, 3-month basis, and 6-month basis. And what that does, it gives you roughly right now 724 stocks. And then to narrow down that list, I just created one simple scan. Again, price history above $2.50. That means the stock's got to be above 250. The average 20-day volume has to be 150,000 shares or more. But more importantly, above all else, is this one right over here. The stock has to be within 3% of its 21-day moving average. And what we want to do is very simply is try to look for stocks that are within contraction, nothing that's overextended. Okay, so when we put this little criteria, it narrows down that that list of 724 names to roughly 73 names for today. Tomorrow it's going to be a different number. Okay, and so far from that one list, we found TK immediately. This will be on the list for tomorrow. Buy stop 5 cents above 458, which was the high of Friday, and STIM buy stop at 641, 5 cents above this price right over here. Let me just look at this right over here. I generally use TrendSpider for this scan, and I see VNet, in my scan of down 3 days. What are your thoughts on that name? Okay. Right. So this stock is down 3 days in a row, and it doesn't look bad at all, right? When I look at the stock, this is a very choppy stock, right? Up and down, very wide, as you can see here. Look at all these wide candles, but here down 4 days in a row, and had a nice move. So when you're looking at a stock, when you have a scan that's based on the way stocks move, right? And down and mean reversion trades, like like right over here, down multiple days in a row, and then you get a what you see here is a pattern of lower highs and lower lows, right? And what you want is a break of that pattern. That a break of that pattern happened right over here. The stock had a 3 to 5 day move, a very nice return. We saw something very similar here, down 3 days in a row. It finally broke that pattern here in the 4th day and had a very nice move. So when you have a pattern that's based on the way stocks move, it's either going to work or not work, right? It's just that simple. It's either going to work or not work. So my opinion on this stock is pretty much irrelevant. Would I put it on my list? No. Right. And the reason why is because I just think it's just too sloppy. The stock for me is just a little too sloppy. I want a little bit more contraction. But if I was going to put on this trade, obviously, I'm going to put it as it breaks the pattern, right? So it's got to be at 613 is the high. My buy stop would be 618, and my stop will be right over here at 580, right? So This is a game of probabilities. We can have the same exact pattern. It might work well for one stock and not the next stock. It might work well, this week, but not next week. You want to play the numbers game. Okay. So if you wanted to buy this stock, 618 is your buy stop. That's going through the previous day high. Your sell stop is 580. Your initial sell stop is 580. And the way you want to look, the way you want to do these trades is you either want to put the same amount of capital into each trade or risk the same amount into each trade. I believe that's the easiest thing you can do because we don't know beforehand which stock is going to trigger. We don't know beforehand which one's going to be the best performing stock. If I go to the rolling 5-day watch list, I don't know. We had this one, for example. Let's go ALLK, long and 110, right? So beforehand, we don't know if it's going to work out or not. All right. This one, MEDP, right? So we don't want to pick and choose. We just want to go out there and put the trades in and allow the market to do whatever it is it has to do. And it's either going to work or not work. And then you want to take the market environment, and that should dictate, how much risk you want to put onto each trade. The market environment, your rolling 5-day watch list should also dictate whether or not you should be taking, some off on that first day at a very small profit, or you should take a bulk of it off of that first day because stocks are not following through. Like, for example, over the last few months, we haven't had much follow through until this week. So I've been taking small profits almost immediately, up 25 cents, up 50 cents, up 75 cents. I did that with ZLab. And then finally, stocks started moving a little bit stronger out of the gate. And now, for example, in ZLab, I'm taking profits, it's 50 cents, $1, and it goes up $7.13. So I'm putting this in the back of my mind and I'm saying, okay, so maybe now I'm not going to start at plus a quarter. Maybe I'm going to start at plus 50 cents, plus 75 cents like I did with Shopify. Okay. Hopefully that answers your question. Let me just go back to my universe. So we just went to the top 400, right? So now we're going to do the same thing with only the Russell 1000 stocks. So maybe we come across some higher liquidity names, some bigger cap names. If you have any questions, put them on the stream, on the chat. Hope you guys had a great weekend. I just came back from a day of sports. I got 2 boys, basketball, baseball. We spent the whole day playing. So now I'm just winding down. So let's go through this. I'm going to change this for a second here. Okay, so let's go through this Russell 1000 names. Again, if I take out this little scan, let me just take this off. If I take this out, I'm going to get 598 names. If I take out that, it has to be within 3% of his 21-day moving average. When I put it back on, the 598 names goes down to roughly 139 names. So now what I'm going to do is I am going to look at all the stocks that printed an inside day on Friday. Okay. An inside day is one of my go-to scans, right? So normally an inside day is just a candle that closes within the previous candle. And you normally see it when you see a tight candle, it's sometimes, depending on the chart pattern, might signify that it's ready for a second move higher. So inside day is one of my go-to scans. Down 3 days in a row, one of my go-to scans. And hugging the 21-day moving average, also go-to scans. So let's go through this here. APA, Amgen, EPS 26 again. Not bad. Right, so Amgen and Gilead, right? Both tight patterns, both printed an inside day. Normally, these large cap companies normally don't print inside days, and when they do, you have to pay attention. I normally kind of like stay away from an Amgen or a Gilead because they're float. 1.2 billion shares outstanding. It takes a lot to move those stocks. I typically rather um, get involved with something with less with a lesser amount of flow, you know, whatever, 100 million shares flow or less. But either way, I'm gonna jot this one down. Gilead, again, inside day looks extremely nice, 86.30. The only concern that I have with these type of names is that it typically gets on the radar of the guys who look at technicals in that cookie cutter manner, the type of technicals that you learn from the books, and they just get whipsawed. I mean, just the other day we bought GD. It's a technical cookie cutter setup, beautiful inside day, another really tight candle, and then it just falls apart, right? So I tend to stay away from that, but Amgen as well. I'm going to put Amgen on the list. I might take it off tomorrow, but 272.23. That's the trigger. The buy stop is 10 cents above, which is 272.33, and the initial sell stop, call it 268. Okay, so I'm gonna put those two on the list. I might scratch them off tomorrow in the morning. EOG, another oil and gas name. I'm gonna stay away from this one. If you look at XOP, XLE, and I think XOP and XLE, they're up multiple days in a row. These things, they kind of like tend to trade as one. So I'm gonna stay away from that. I'm gonna stay away from EOG. KRTX. Here's another one again, another biotech stock. The biotech sector has been looking good. We had a nice trade with LABU last week. Here SJM, looks good. Just again, I'm just gonna skip that one. Mhm. mRNA's got a very nice space. We played this the other day. It's got a nice space. It's just too much drama around mRNA right now. 227 VRTS. Again, here's another stock down 1, 2, 3, 4 days in a row, right to the 21-day moving average. Right over here on this day, it had a 4x3 day. It was a day where the stock was up 4% or more on 3 times the 20-day moving, on 3 times, at least 3 times its 20-day moving average volume. So in other words, the stock was trading here roughly 8 million shares, and on this day, some type of news came out. The stock traded 29 million shares. 1161 buy stop, VTRS buy stop 1171, and initial sell stop 1130. So another oil and gas thing. This is Mm, mm, mm. This is even tighter than this is even tighter than EOG. 127. Today is the 16th. So we have about a week. This is even tighter than the other one. I'm gonna put this one on the list. CVX 177.99. Initial sell stop. Let's call it 175. Hmm. And I'm going to check Twitter and stock to it. If this thing is being mentioned too much, I'm going to take it off the list. This is the GD that we were talking about. It looked phenomenal. But again, these cookie cutter patterns, people start talking about them, and all the IBD guys that look at the charts the same exact way. They just, it becomes, what do you call it? They just take it up and then they just run the stops. For those of you who just hopped on, we're going through the top 400 names, the top best performing stocks on a 3-month basis, year to date, 6 months, and 1 year. And then what we're doing is to narrow down the list. We put in one criteria, a couple of criteria above $2.50, at least 150,000 shares as far as volume is concerned, and it's got to be within 3% of its 21-day moving average. So that narrows down the list of significantly from whatever 700 names to 100 names for tomorrow. And if you have any questions or want a second opinion on the stock that you're looking at, just put it on the chat. Right. So far from those two lists, from the top, from the Russell 1000 names and then all stocks, I jotted down 1, 2, 3, 4, 5, 6 names. Right. 6 names. Let's look at the inside day list. And let's start with 526 names in the inside day list. Let's start with all the stocks that had this one particular candle that were up at least 4% on 3 times the volume at some point within the last 40 days. We're going to start with those stocks first here. I'm ranking them based on that first. Splunk, they report on 3-1. All right, you see here the 4x3 name. You see here down 4 days in a row, there was, one opportunity here to go long. Here down 4 days in a row. Once it broke that pattern of lower highs and lower lows, it had a nice 4-day run. So when you look at charts, right? So when you punch up, you buy any chart book, whatever the case may be, all they're talking about is it broke this high, this 52-week high, and you buy it 10 cents above this high. You need to start looking at charts and start looking from where these moves are starting from. Okay, this move here started from here. Stock is down 4 days in a row. If you buy one of these charting books, they're going to tell you that to buy the stock as it breaks this high. And they kind of like ignore the move that just already happened. You want to start looking at charts and start plotting from where are the moves starting from. Here, look at this one. Down 1, 2, 3, 4, 5, like 8 days, 9 days in a row. Pattern of lower highs and lower lows. And then where is it? pattern lower highs, lower lows, and finally it breaks the pattern. It goes up for 1, 2, 3, 4 days. That's a great opportunity. Same thing here, down multiple days in a row. It finally breaks that pattern, right? So this is the way you want to start looking at charts. And when you start looking at charts that way, you're able to create scan based on the way stocks move. Like here, 1, 2, 3, 4, 5, 6 days in a row. Look what happens. Boom. 1, 2, 3 down 4 days in a row. Look what happens. Okay. This is another setup here where it's tightness, tightness, tightness. So I'm going to put here Splunk, SPLK, 89.14. Initial sell stop. Let's go right over here. Let's go $85. Okay. PANW. Costco, SGMO, BWMX. All right. So I'm going to look at those stocks based on my time frame, right? So when I'm looking at charts, I'm looking for what works within my time frame, which is roughly 3 to 5 days. Okay. The longer your time frame, normally typically you have to look at charts differently. So if you want to have a longer time frame and you want to hold on, like for example, certain people have a hard time taking losses immediately, right? They don't want to take a 5% loss or a 10% loss within 3 days, but they have no issues taking a 10% loss after 6 months because now they felt that they gave the stock an opportunity to move and it just didn't work out, right? So you have to know your personality and the way you are. Because if you can't, if your personality is not one where you can take losses immediately, then you have to step into stocks with a wider stop, right? Maybe you buy something, you give it a wide initial stop of roughly 20 to 25%, and you allow the stock to wiggle, go up and down. It'll keep you in the stock a little bit longer. It doesn't mean it's going to make you money, but it'll keep you in the stock a little bit longer. So they're just roughly two type of different stops. One is a wide stop, one is a very small stop, and they both have their benefits and they both have their flaws. But you have to do what fits within your personality. I don't mind taking a loss, an immediate loss, right? Some people have an issue with that. So you might want to start looking at stocks and start with them with a much wider stop. So let's take a look at those names. And all these stocks that I'm jotting down, they're for tomorrow. If they don't break their previous day high, if they don't trigger by Tuesday, that's a totally different setup. These setups are just for tomorrow. So let's go with P. All right, Splunk is the last one. Let's go to PANW. Right. So this was probably, a good setup right over here through this high of 137.16, right? I'm looking at a stock that's down. It's been trading sideways here. You can, kind of say, hey, it's found buyers right over here, right around this level. So if you wanted to buy this stock, if I wanted to, I'm not going to put this on my list, but if you wanted to buy this stock, if I needed to buy this stock, I'm going to buy this stock. If it breaks through Friday's highs, 10 cents above, buy stop 139.28, and then I'll use 134, this low right over here as my stop. And then I'm looking for a 3 to 5 day move, right? And here's just take a look at PANW, right? Down 1, 2, 3, 4, roughly almost 5 days in a row. A pattern of lower highs and lower lows. Where did this move start from? Right? Once it broke this pattern, which is right over here, it gapped up. Again, you look at cookie cutter charts. The way they look at charts, they're going to tell you that you have to buy this stock above this high, completely ignoring this move from here. And the reason why you want to wait until the stock breaks the pattern is because down 3 days in a row can turn into 4 days, 5 days, 6 days, 7 days. Here's a stock that for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days, it did not break the previous day high. Right? This is the reason why I want, when I'm looking at, mean reversion trades, Stocks that are down multiple days in a row, 3 or more, I'm looking for a break of that pattern of lower highs and lower lows. The break of the pattern for me is a stock going to the previous day high. Okay. So start looking at stocks from where are these moves starting from, right? Down 1, 2, 3, 4, 5, 6 days in a row. Where does the move start from? Once it breaks the previous day high, and it only gave you 3 days. This one doesn't look bad. You know, if I had to put this on my list, it would be 485.69, 10 cents above the previous day high. And I'm going to put my initial stop right over here, 475. Okay. SGMO. Let's see what we have here. SGMO. No, not for me. It's already up 1, 2, 3, 4 days in a row, right? So if I'm buying stocks and I'm looking to sell them within 3 to 5 days, I'm not going to buy something that's already up 4 days in a row. It doesn't mean that this stock can go from here to $5, but this is not the type of setup that I'm going to take, right? Because if you look at stocks, they normally go up for 3 to 5 days, and then it kind of like goes sideways to down. So something like this, it doesn't mean it can't gap up tomorrow or it can't go up. But for me, I don't buy stocks that are up multiple days in a row, because again, my time frame is 3 to 5 days, and my time frame was a month, 2 months, 3 months. Then this means nothing at all. This little up 4 days in a row means nothing at all, but that's not my time frame. BWMX. Same thing. Up 1, 2, 3, 4, 5 days in a row. My time frame is 3 to 5 days. So this stock has already met its target of 3 to 5 days. So it's not for me. For tomorrow, it's not for me. Come Tuesday, Wednesday, it prints an inside day, another inside day, where it's down 3 days in a row, then it's a different story. But for tomorrow, it's not for me. All right, so let's go back to Splunk. This is where we left off. A lot of biotechs. 32,000 shares, 82,000 shares. Okay, this doesn't look bad at all. The problem is, I'm sure people are looking at this near highs, cookie cutter pattern. And when I went through some names Friday afternoon, I jotted down a whole bunch of inverse ETFs that are down multiple days in a row. I'll go through them in a few. Again, I like this pattern, right? You have 1, 2, 3 days where you have the stock was up huge on heavier volume. Then you have the natural pullback, right? This is what you want. This is where ace setups come from, right? And if you go through the year-to-date winners like on a quarterly basis, you could 90% of them are going to have the same setup, which is a stock that's dead. This stock had a reverse split right over here, a 1 for 50 reverse split. I mean, it's trading 29,000 shares. It's completely dead, near 52-week lows. And then boom, something happens. Something changes. And the stock goes up big on heavy volume. And this becomes a tremendous winner, right? If you go through and start following and start seeing the biggest winners on a year-to-date basis, you're going to see this pattern over and over and over again. The stock that's dead, trading near lows. A lot of times you have reverse splits. It does nothing at all. Then suddenly you have something that changes the character of the stock, goes up big on heavy volume. then it consolidates for 10 to 15 days. After that consolidation of 10 to 15 days, at the very end of the pattern, you see tightness in price and you see volume contraction, very low volume, right? Oh, here's the reason why I changed the color of the candles on TC2000 so I can see this. The yellow, this over here, the yellow candles are inside days, right? This color candle, whatever this is, blue, teal, whatever it is, this is when it prints an inside day on the lowest volume in the last 10 days, right? This to me is an A plus setup, right? It's an A plus setup. It would not be on the list because the buy stop is at 23.41 and the stock is trading at 19.62. That's way too far. If I'm looking to sell stocks at 5, 10, 15%, I can't buy something where the buy stop is 10% away. But I flagged it, right? So that way I can go tomorrow when I go through my flag items, which are stocks that I want to see every day. I'm gonna see this one again, and maybe tomorrow it prints another inside day, and it's much tighter, and then it will be on the list. But this is an A plus setup, okay? STIM, we have it on the list, right? This one I jotted rhythm down. It's a biotech stock. I jotted it down because again, that's 1, 2, 3 inside days back to back to back. Buy stop is 31.96, and the initial sell stop is right over here. Call it $29. I like to give the stock the initial room, a little bit of room, so I'm not getting stopped out within the noise. My only concern with the stock is it's been trading, it's been holding up so well, but not really moving. Sometimes that's a little concerning, but I'm going to put it on the list. So again, so what we want to remember is we want to start looking at charts, studying charts, and start seeing and start plotting where are these moves starting from, right? And again, you're going to see the same things down multiple days in a row. Tightness right over here, nice little tightness, 2 inside day candles. Instead of just looking, this is previous resistance. So many biotech stocks. 178,000 shares. All right, so this one, CENX. If you look at my charts, as I go through my charts, rarely are you going to see any lines drawn in the charts. I just don't do that. When you do see them on my charts, they're normally only horizontal lines, basis, right? And I have a whole list over here of stocks that are or were in basis. This stock was one that, as I was going through one of these scans, I came across this stock. I drew the line so I can see the base, and I put it, and I took the symbol and I copied it to my base file. And very simply, the stock has been trading sideways from July all the way till now. The bigger the base, the higher into space it goes, right? Again, this doesn't look bad at all. An inside day, buy stop 1007, 1027, initial sell stop right over here, 920. CENX 1007, 920. If you look at the weekly chart, again, a very similar situation. This doesn't look bad at all. I normally like to see more tightness, but it doesn't look bad at all. Is it time to play the inverse ETFs? I jotted some down. I jotted some down Friday afternoon as I was going through the list. Let me just go through a few more of these names and we'll see. I got mixed feelings about them right now because, so far, I think there's been a character change in the market. I think there's been, a slight character change in the market where instead of focusing on, a 1 to 2 day reversal on the indices, I just want to focus on individual trades. But look, I mean, look at the cryptos over the last couple of days. They've been on fire. Just the other day, right on Friday, when I put a buy stop on Solana, it was Friday, and I think it triggered Friday night, I believe, right? And I put some alerts up at plus 5%, up 10%, so I can sell some. And I think it went through my alerts. And by the time I actually saw the alerts and I go punch up Solana, it was up 30%. Right? So that's a small character change. So I don't know if I'm too interested in the inverse ETFs. I'll take a look at them in a little bit. But we'll see. Another oil and gas name, 8.8 million shares. Yeah, not bad at all. There are a couple of sectors, oil and gas, gold, metals and minings, that 9 out of 10 times I much rather play the ETFs, the 3-time ETFs than the individual stocks, because those sectors, they typically move in tandem. They move together as one, as a unit. And you normally get a much better bang for your buck by going the ETF route than by individual names. Okay, so let me just stop there. We went through 157 names. Let's just take a look at down 3 days in a row. Here's some of the ETFs, okay? SQQ. Down 1, 2, 3, 4, 5 days in a row. This will not be on the list. And the reason why is the buy stop is whatever it is, $2.50 away. That's too far from me. SH, this is a single one. That's SOX. Okay. SOX as well, 28.45. The buy stop is $1.50 away. No, I'm going to skip it. It's $1.50 away. Now, if this setup would have happened in August, this would have been on the list. But now individual stocks have been working at least for the last week, right? It just seems like there's a character change. You see all that momentum in Bitcoin. And when you see those type of moves, they just don't stop on a dime. That just typically doesn't happen unless you're in a really bad bear market. And I don't think we're there right now. I think we were, but not right now. So I'm going to skip this one. And if you look at all my notes here in the stocks, they were all pretty much bought down multiple days in a row. All when they went down multiple days in a row for the most part. Look at this right over here where you see all these arrows. So I'm going to skip this one. The buy stop is too far away. SPSX, again, the buy stop is just too far away from me right now. 1970 to 2047, that's just too much. LABD, 14.21 to $15, just too much. It doesn't mean that tomorrow they can't print another inside day, a tight candle. They might be on the list for for Wednesday. Okay, these are just too far away from, they're too far away from me. Drip. Again, this is down multiple days in a row, but that's 50.46 to 13.46 to 14.02. I'm taking profits on this starting at plus a quarter, plus 50 cents. The buy stop is whatever it is, 56 cents away. That's just too far. Buy stops are too far. Let's go to just change this to stocks. All stocks. And let's start with the 4x3. Let's see what we can find here. If you have any more questions, just put them on. VTRS, is this on the list already? Yep, VTRS is on the list. Backs. And this is, not a bad one. Not a bad one. 4506, 477 million shares. This is not a bad one. Backs, 4506. Initial stop 4430. And again, I want you to look at this chart very simply. Where are these moves starting from? Down 1, 2, 3 days in a row through this high. It's got a multiple day move. Right over here didn't last so long, but you want to start looking at charts from where they're starting. I mean, these charts from where these moves are starting from. And tomorrow in the morning, I might clean the list up a little bit. I might clean it up a little bit more. And narrow down the list a little bit more. $542,000 shares again. I'm going to put this as on the list as a maybe. Let's see here. Oh. So look at this. Only 48 names are down 3 days in a row or more. That tells you how good the market's been doing for the last week or so. That's a very small amount, 48 names. We do this. Do this. Rolling 5-day watch list, right? This kind of tells you what's going on with the market. This list, this is from the names that were on the list on, was it 1/9 or 1/10, one of those days, but LABU had a big day. Shop didn't trigger on this day. ALLK had a decent move down multiple days in a row. Here's was the trigger above this high here. RXDX, good move down multiple days in a row. Trigger right over here. MEDP, contraction. The trigger was above this high here. And again, you have all these names on the list. We don't know beforehand which stocks are going to trigger. We don't know the winners and the losers. All we can do is figure out how much capital we want to allocate to these stocks. You can do it on an allocation basis where you want to allocate 3% per trade, 5% per trade, or you could do it via risk. I want to risk 0.25% of my total equity into these trades. But I believe you got to do them. You got to do the same amount for each trade. Because again, we don't know beforehand which ones are going to be the best performing stocks. But if you have a $100,000 account and you decide to risk $250 per trade, then you're giving each stock an equal opportunity. Now, as you get better, you know, you might maybe you might be able to on every single day, you might be able to say, hey, this is an A+ setup. I'm gonna put more money into this one. You can do that as well, but I think in the beginning, risk the same amount per trade. Either you risk the same amount or you put the same amount of money. And when you're risking, and when you're doing it via risk, your position size varies, right? If you're doing it via risk, and you take a trade, like for example, Gilead, where your buy stop is 86.40 and your sell stop is $85, this stock right over here, it's gonna be a 20+% position, because you're gonna take 86.40 minus $85 is $1.40. $250 divided by $1.40. That means you can buy 178 shares. 178 shares times 86.40. That's roughly $15,428. So you're going to take a 15% position if you're risking $250 in a $100,000 account. That's a decent size. So you can do it that way, or you can just do 3%, 4%, 5%, whatever makes you feel comfortable. When you're doing it via risk, like I just stated, the $250, and your position size becomes 15%, it's great, right? If the stock goes, it's going to make a tremendous impact on your bottom line, but then you fear the gap down. Then something goes wrong, you have a gap down on a 25% position that goes through your stop, then you have an issue. So these are things you need to think about. Any questions before I wrap this up? I'm going to put the list. I have the list ready tomorrow in the morning. But so far from what we went through today, we have RYTM, we have TK, we have STIM, we have Gilead, we have Amgen, we have VTRS, we have CVX, Chevron, we have Splunk, we have Splunk, CENX. See, some of these come tomorrow. I'm going to take some of these out, like this CENX. I'm probably taking out. Splunk, I'm probably going to take out. So some of these I already know I'm going to take out by tomorrow. But I just wanted to show you guys the process, and more importantly, the way to think about trades, think about what we know and what we don't know. We don't know a lot. And there are a lot of things that we cannot control. We have to focus on what we can control. The thing we can control is that we do the homework, we have the list, we put the buy stops in, and they either work, trigger, or they don't. It's that simple. And then you can also think about, when you're looking at charts, start looking at charts from where these moves are starting from. And that tells you a whole lot. So that's it. Trade them well and be well. And I will see you guys in the room.